Hello, chart watchers, and welcome to this Monday, January 8th, 2018 Market Watchers Live show with Aaron Swinlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived on our site until the next show begins, so you'll have roughly 24 hours to review it. If you'd like to review an older show, you can now find those at our YouTube channel or on Facebook. During today's show, please feel free to submit ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, we'll select stock symbols from your requests, and we'll use those in the 10 in 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. As you leave today's show, we'd love to get your feedback. In the lower right portion of your screen, you'll see a How Do We Do section with a link to a very brief one-question survey. Let us know what you think of Market Watchers Live, and feel free to provide us some suggestions for future shows. For those of you joining us for the first time today, welcome to the show. We are glad to have you. And for our regulars, welcome back. Before we get going today, let's take a look quickly at a couple of announcements. This Wednesday, Bruce Frazier will be returning to the show. Of course, he is of the Wyckoff ilk, and he'll be going through the Wyckoff, maybe give us an update on what's taking place and what he thinks about 2018 and U.S. stocks. Greg Schnell will be hosting this Saturday's Stock Charts Outlook, and he will have a special guest on Saturday. So you definitely want to mark your calendar. That will start at 11 a.m. on Saturday, 11 a.m. Eastern. So make sure you check that out. And with that, I'm going to bring in my host, Aaron. Another weekend in the books, and now we got another trading week upon us. How are you doing today?
I'm doing quite well, and believe it or not, we got a little bit of rain today, this morning, and tomorrow we're actually, and this is in Southern California, guys, we never see this, we have what quote unquote downpours tomorrow with thunderstorms in the afternoon. So I'm kind of excited because I haven't, since living in Ohio, I haven't seen a real good thunderstorm, but I suspect what is considered a thunderstorm here is probably not as exciting as what I used to see in Ohio. So
I haven't traveled much to Southern California, but are you kidding me? I mean, you don't get thunderstorms?
Really, no. And well, I mean, we don't get rain hardly anyway, but we are so desperate after those fires. So I'm really excited. The only problem is if we go into downpour mode, now we're gonna have to worry about mudslides. So it's, double-edged sword, as they say, but I'm doing great.
That's good. I'm on the East Coast, and of course, it has been frigid on the East Coast for about the last week to 10 days. I've been waking up in South Carolina thinking I'm living with up near Greg Schnell in Canada. I mean, it has been freezing. The lows have been single digits, which down here in South Carolina doesn't happen very often. But anyway, we're supposed to actually get a veritable heat wave tomorrow. I think the highs are supposed to be back up in the 50s. So I've seen those for a while. So that'll be definitely some nice relief.
Yes.
But anyway, I know we got a ton to get through, and the market's up and trying to run higher again, at least certain parts of it anyway. So why don't we go through the agenda with everyone and give us that first market update?
All right. Okay, well, for the agenda today, we're looking at, first of all, we're going to do our Monday setups. It is Monday after all, followed by an earnings spotlight by Tom. We'll be looking at some of those Chart Watchers articles, and I already see some questions in the chat box about our opinions. Of course, follow it up with 10 and 10 to 1, and our first stock is going to be Teck Resources, TECK. finally, we'll finish off with the decision point report. So with that, I think we should get started with the first market update. And here we go. So first, we're going to take a peek at our candle glance. And I remembered today to add the TSX to the candle glance, so I'm not going to be leaving out our Canadian friends out there. All right, so actually, we're seeing the markets down just slightly. It was a little bit of a rough morning there for the Dow and the S&P 500, but they're working their way back up. I don't like the shape of this triangle here, an ascending triangle, but well, actually, it should break out to the upside. So we'll have to see if that can continue up. NASDAQ is higher at this point, the only one right now in the positive, really. Russell 2000 small caps got hit really hard this morning, and they're trying to make a comeback. They've managed to pare down their losses by about a half. We can see the TSX is down and has been trending down since the open. And Treasury yields are up slightly, although they started down. So UUP, big gap up and is mainly consolidating at this point. You can see commodities are lower, likely affected by oil, and USO is, actually at this point mostly unchanged. It's had a real volatile morning. We'll have to see where it is at the end of the show. And gold is diving at this point, so we're going to have to see where it finds some support. But GLD reading at 124.99 currently. VIX is up slightly. We're now getting readings at 958. And advances are not leading declines. The declines are leading advances at this point in time. So let's go ahead and go take a look at our market summary and see what is going on with our sectors and international ETFs. So this is a great place to go. You could see exactly how to get there from our homepage. And sector spiders. So we're looking at technology and utilities are leading the way, with healthcare as our laggard. Financials are also down slightly, but healthcare down 0.67% right now. U.S. industries, paper, semis, and hardware are leading the way, with paper up 1.84% at this point. Gold is the big laggard, not surprising when we took a look at that candle glance of GLD. Currently is down 1.3%, just slightly more than that. We can see international ETFs. Malaysia and Russia are leading the way right now, with Malaysia up over 0.75%. Laggards at this point, Austria and Australia. But if you take a peek at this list, you can see we only have about 8 of the international ETFs that are reading on the upside. The rest are in the negative. So with that, I'm going to conclude our first market update and send it back to you, Tom, for what you find interesting. And I know we have some economic reports out there too.
Yeah, actually, it's pretty quiet today with the economic reports. They'll pick up later this week, but there wasn't really a whole lot. We do have a consumer credit report that comes out later this afternoon, but otherwise really don't have a whole lot going on. So I thought I'd just start with the small caps. You pointed out that we did see some weakness earlier, but we broke out at about the 1550 level on the Russell 2000, got up to about 1560, and today's move to the downside really isn't a whole lot more than just a retest, in my opinion, of a pretty key area that we broke out above. So you can see the move higher back in November, put in a little bit of a cup, nice little handle, and then we broke out above it. And I think today's action to the downside really was nothing more than just a quick technical retest of that breakout level. So I'm still looking at the small caps pretty bullishly, even though their best month, December, has ended. They do actually perform pretty well now through May, particularly February through May. So January, kind of like the S&P 500, they tend to take a backseat to the NASDAQ. But then once we get back into February, we do tend to see some outperformance in the small cap area. So that's something to keep in mind as we go forward. A couple of industry groups to take a look at. We saw the apparel retailers making a huge move, and I think we're going to see some really strong reports coming out of this group when the earnings start coming in later this month. And I think a lot of the retailers actually report in February. But based on the huge move that we've seen throughout the holiday season, even before the holiday season, I think this is telling us that we're going to see some really strong reports. But technically, notice on the pullback, we're actually holding this rising 20-day moving average, which is typical as we accelerate in terms of price momentum to the upside. You can see that the MACD on the most recent price high also had printed a high. And normally when that's the case, we pull back and we get that rising 20-day to hold as support. And that's what we're seeing so far. Now, Aaron, you had also mentioned that healthcare was struggling today. One of the reasons we've got biotechs under pressure today. But again, I think it's nothing more than just a quick move back down to test the rising 20-day moving average. So we had a nice breakout. The breakout occurred at about the 2025 area, maybe 2020. And so this pullback today where we saw a low of 2010, I think it was just a test of the 20-day, which is at 2013. And we've since started to rally back off of that. So again, I think technically not a whole lot going on here, and really not a bad bad day, even though on the surface you never like to see it, areas moved lower. You'd like for your stocks or the areas where you're invested in go up every day, but we know that's not going to be the case here. I think this is nothing more than just a normal technical support level being tested, and so far a nice rally off of it. So those are a couple of key areas. Now we do have earnings reports beginning. It's hard to believe that earnings season is approaching again very quickly, but a couple of big reports come out this Friday. JP Morgan will be reporting its earnings on Friday morning, and you can see, it continues to move higher. We've had about a 3 or 4 month run to the upside in JP Morgan from about $87, $88 all the way up to about $110 that we saw last week. So I think that this is a group that is expecting good results. I think we'll get those on Friday. But one problem I'm seeing with some of these banks, and you'll see it not only with JP Morgan here, but also with Wells Fargo, is we're starting to see some negative divergences. So here, prices are moving up, but you can see the MACD is really struggling to move any higher. So it's just a case of maybe the group has moved a little bit too much too soon. And so don't be shocked when we start getting some earnings reports out. Even if the reports are good, I wouldn't be surprised maybe to see this group maybe languish a little bit throughout the balance of January. We'll have to wait and see how that evolves. The other stock that I mentioned, Wells Fargo, WFC, same thing. Beautiful move up, nice volume, broke out, left a little bit of a tail back on I guess that was Thursday of last week, yeah, and did so with a negative divergence. So as we've moved higher, you can see that the MACD's kind of rolled over. It wouldn't be a horrible thing for some of the banks to pull back here and maybe just give a little bit back. Finally, let's take a look at the bank index itself, the DJUSBK, and you really can see the same thing. We're continuing to make these moves to the upside, but we're doing it with a MACD that's not following suit. So what this is telling us is that while price action is moving to the upside, we're actually seeing the 12-day and 26-day EMAs, they're actually converging. They're not diverging. So as you go, when prices go up and the MACD rises, that's telling you that those moving averages are pulling apart from one another or diverging. And that's a suggestion that the short-term moving average is pulling away from the long-term moving average, which is very bullish. But the problem is once you get to a point, those moving averages do start to move back toward one another. They converge, and that is what we're beginning to see with some of the banks. So I think it's going to be a good earnings season for banks. I just don't know in the short term whether or not we'll continue to see that price action follow suit to the upside. A couple of companies that were in the news today, Kohl's, KSS. Of course, we've seen some great moves to the upside in many of the department stores and the retailers and so forth. Kohl's reported a 6.9% year-over-year increase in comparable store sales for both November and December. And you can see, look at the action in November and December. So they're just now coming out with the news, but look at what technicians see. Technicians saw a breakout of the downtrend line, saw a breakout of price resistance at about $46. A lot of things have happened over the last 2 months that technicians see that fundamentalists don't see until you get this report that comes out showing the huge increase. So another reason why technical analysis is so important. It wasn't too hard to predict that Kohl's was going to see some pretty good numbers coming out, given the fact that there's a lot of accumulation that's been taking place in this particular stock. Now, not so fortunate today is GoPro, GPRO. They reduced their Q4 revenue guidance from $474 million. This is the Wall Street consensus estimate, $474 million, They lowered it this morning to 340 million. That's a pretty big drop in their forecast. And take a look at what's been happening heading into this announcement. Stock has been selling off. So the exact opposite of what we've been seeing with Kohl's. Kohl's, everything was heading higher prior to the announcement, suggesting that things were going really well. Here we've got a stock, GoPro, that's actually been declining. The stock was at $12 back in September. Prior to today's announcement, it had lost, what's that, probably about 35, 37% of its value in 3 months prior to today's announcement. So we'll have to see whether or not we maybe put in some kind of a exhaustive move to the downside. But right now, it's not looking good for GoPro. They also are reducing their global workforce from 1,254 that they had as of September 30th. And they're now saying that they are going to have less than 1,000 employees worldwide. So that is a 20% reduction, at least a 20% reduction in expected workforce. So just not very good news from GoPro. But again, this is a stock that's not been performing well. And this is why, from a technical perspective, I don't like taking a look at stocks that are downtrending, because chances are they're downtrending for a reason, especially when many of the other stocks in their space are moving in the other direction. A couple of upgrades and downgrades to talk about this morning. First of all, Caterpillar got a big upgrade. Morgan Stanley upgraded Caterpillar. And you can see, first of all, the stock's been doing great. So the upgrade just added to the bullish picture that we were seeing anyhow. FLIR got an upgrade. And check this chart out. Beautiful flagpole, sideways flag action. Actually made a breakout on Friday. And then today, we get the upgrade. Beautiful move up, though, in FLIR. Don't like today's candle. If we finish like that, I imagine that in the short term, we'll probably see a little bit of a pullback. But I do like this chart, and I think a pullback down to gap support, back down around that 48 level would be pretty interesting if we do see some weakness coming up. Big Dow component, United Technologies, UTX, got an upgrade, but so far printing a black candle and volume today already 3.3 million shares. So if we finish with that candle off of this solid uptrend and probably the heaviest volume that we've seen maybe for the last few months, that might mark a short-term top on United Technologies, UTX. One of the big semiconductor stocks, Applied Materials, I think Needham and Company raised them from a buy to a strong buy. And this downtrend that it was in, I think you can probably say goodbye to the downtrend. We're now trending higher. That 20-day moving average is starting to turn back up again. This now is really beginning to look more and more like a cup off of this uptrend. I think this is still a very bullish looking chart. And when you look at it and you see the big volume on the pullback on Applied Materials, keep in mind that all it did went back and tested the area of the breakout before it started turning back to the upside. So I think that this chart remains very bullish at this point. Last couple of stocks, these are downgrades. SNAP, Snap, got downgraded today. Stock, after trying to recover throughout the latter half of November and then into the first half of December here, has been downtrending again, and this morning got a downgrade. So not looking great here. IBKR, another downgrade. This is Interactive Brokers Group. But after a gap down, look at this one recovering. And we've talked about this on the show plenty of times before. Many times when you get these stocks that are moving higher, downgrades actually provide entry opportunities at lower prices that you generally don't get too many opportunities at during these uptrends. So IBKR looks a lot different than Snap, in my opinion. CTXS, final one. This is Citrix Systems. And you can see, again, beautiful move up, but they get downgraded. The stock opens down probably about $1.50 or so, but it is rallying off that earlier low. So I think Citrix Systems kind of fits that mold of a company that's been anticipating some great results. Was downgraded. I'm not sure the reason for the downgrade, but I'm going to guess that maybe it was valuation because the stock's come up so much over the past 3 months. But again, a lot of times that just creates a really nice opportunity to enter a stock. So that is about all I have for technical news this morning. So why don't we move into our Monday setups?
Sounds like a good plan.
It is a good plan. And before we get into our actual setups, what I want to do is just bring up what we had last week. So, of course, last Monday was New Year's, so we did it on Tuesday. So this was an abbreviated week for us. I'm going to switch over to an intraday chart and just kind of look at. I'll pull mine up first. NAV, which was out at 43.67, and it is currently at 43.95. So it is up maybe 0.6%. But up is up.
Up is up, I was going to say.
Up is up. And then let's see UFI. UFI is at 36.03, and you put it out at 35.98. So it's up a nickel. Up is up.
Up is up. Mostly unchanged, really, but it was a week of a lot of. I'm not surprised based on the trading for the week. So
yeah, actually, it looks like UFI had a pretty nice move, and I think NAV did the same thing. We did have a pretty decent move intra week.
Yes.
And came back down on Friday in your case, and I think NAV may have done something similar. Actually, I think NAV probably went up earlier in the week and then worked its way back later in the week. So both the picks were up, it looks like, throughout the trading week. So not bad. I'll tell you what, anytime a stock is up, I think it's a good week.
Yes. I will always take that in my investment account. So
right, so
gain is a gain.
Yes, a gain is always a gain. I think that is something certainly to always keep in mind whenever you're trading. But Erin, why don't you go ahead and go through your setups and give us your pick for this week?
I shall do just that. Let's see. All right. Hopefully you're seeing my summary screen here. So yeah, I had our previous pick, as you said, and we did okay here. Let me get my screen the way it should be. All right. Can you see that good, Tom? That makes
Yes. Yep.
Okay. Just making sure. All right. So yeah, we got that breakout, which was what triggered it for me, along with that almost buy signal, or I think it was on a buy. So yeah, not bad. I don't think it's done. I mean, I still think it could get up to that 38 level with that buy signal. We'll have to see. So the first one of my 5, and I'll go rather quickly. We'll see. E-Trade, didn't pick it, but it came up on my scan. I actually got 19 stocks that came up on my scan, and I narrowed it down to 5. So, I went over how to scan. I didn't go through the weeding out process that much, but I'll save that for another time. I will definitely do that. And I know maybe at the end of the show, I might show you a little bit. But anyway, E-Trade. So we got a nice breakout. I liked this because we don't have the buy signal yet. The only reason I'll give you my reasons for not picking it as my Monday setup. I like it. It's got the breakout. I just the PMO buy signals coming in kind of an overbought territory. So I don't usually like to get in on something that's already had such good momentum to get it up to that level. So that was why I didn't pick it, but I still think it's a nice looking chart. F5. And this one I think we talk about, it seems like it comes up regularly. So F5 looks pretty good. We got the breakout, and now what's nice about it is it has pulled back.
Hey, Erin.
That area of support. Yep.
I'm seeing your screen, which is showing your individual scan, or the stocks. But when you're talking about the individual companies, your chart's not coming up.
All right, let me see if I can fix that. Here we go. Thank you for letting me know.
No problem. Right. There you go. That's better.
Okay, so as we can see, all right, so we got the nice breakout, and now we've had the pullback to the breakout point. So I thought this one looked really good. It was on my, should I take it? Should I not take it? The deciding factor was, again, kind of an overbought PMO buy signal here. But again, I still think this chart looks pretty good, which is why I included it. Click. We've looked at this one, I think, a few times too, Tom. Nice breakout. And look at that PMO buy signal coming in. Nice, clean one. And that's always a good sign that you could make a case for a double bottom executing here, which means we should expect a move about the size of this pattern. And that really would put you up here to test that overhead resistance. So liked this one. It was a close, I'd say this one was a second, with third being F5. RMD also looks nice. Look at that breakout from the ascending triangle, execution perfectly of that pattern. You can make measurements on these. I tend to not do that so much, but if you go back, you could actually pull this back. So really the size of the end of that triangle there, you would add to the top. So, I think there's some good upside potential here. The PMO looks pretty good. I just didn't opt to take it, but I think this one looks pretty good as well. But the one I picked was Faro, Faro, and one of the reasons I picked it is when I mistakenly didn't run the proper scan. I ran the scan and weeded out too many, and then had to go and add back a few. And so when I went back through the list again, I picked this one a second time. So I'm like, you know what? If I picked it twice as being a good one, then I'm going to make that my pick. So nice PMO buy signal here, like those clean ones. And I do like the fact some people say, but it's not oversold. It's oversold in terms of being in a bull market because it got its bottom above the zero line, and that implies internal strength. So I like that. I like to see those bottoms show up above the zero line. And you can see we're just about ready to have a PMO crossover. So like this, you can see a flag formation, and the height of that flag would put us just above this overhead resistance level. So I like the way that's set up. I think you can make a case for, a cup and a small handle here. Might go back a little bit lower to test the 20-day, but I think we're good here. I'm going to pick this one. Kind of wishing it weren't at the top of its trading range right now for the day, but I've got a last price of $51.10. So for Faro Technologies, I'm going to take my pick, and it's at $51.10. So I'm going to hand it over to you and tell me what you have on your list.
All right. Well, I got a few stocks. I actually like Faro. The only thing that, for me is the volume is a little light sometimes. So that probably would keep me out of it. But other than that, I do like the chart. I like the fact that it did go down and test that rising 20-day moving average and bounced off of it. So I think it's acting pretty bullish, and looks like maybe it does want to head back toward that recent high. So I might have my work cut out for me trying to come up with this one this week. We'll have to see. But let me go ahead and show you a few stocks before I get into my pick. And the first one I want to show you is EVRI. Now, the stock has actually been weak, but because the market's been strong, and this one's, I don't see any major volume to the downside. And I do think it's, close to this support area, which was down around $7. We had a huge move up earlier in 2017, and then sideways consolidation, and we're near this bottom. I think if we can get back through the 20-day, and what I'm looking for is to see if we can get some volume coming in on this move. I think it's probably going to show up pretty bullishly on your PMO, Aaron, because you can see the MACD turning up. I imagine that the PMO is probably doing the same thing in oversold territory. But EVRI looks kind of interesting, but there's light volume. We haven't gotten through the 20 yet, and it could turn right back down and maybe get back down to 7. And when doing so, could have a really nice positive divergence. So I just think it's a little premature. It's one that I'm really watching closely, but I'm not going to go with this one. FINL, I own this stock, but it's not going to be my pick. I actually filled out a position earlier today on this move back down close to this tail. You can see with earnings, we had a big move up on heavy volume. I think I talked about this one last week when it came back down. I liked it around the 1320 level. I also think it looks pretty interesting at the 20-day moving average. And if we can close above that 20 with a long tail beneath it, I think that would be a very short-term bullish setup. But we will see how it finishes today. TLRD is another one that I think looks kind of interesting here. Beautiful move up, nice volume trends. MACD look great. And here we are for the third straight day testing that rising 20-day moving average. I think that looks interesting. PANW. This is one that actually broke out to a new closing high on Friday, and it did so with volume starting to pick up, and it's trying to continue. I think we're going to probably run toward this intraday high around 157 or so, and then we'll see. But I think we're getting this closing breakout. Stock's been, slowly making its way up, consolidating, then going up again, consolidating. I think it's going to continue its path to the upside. So I like the Friday breakout there. GDOT, fairly similar type of pattern where it made this big breakout. This is a breakout on Friday of the downtrend of the highs. So we got a really nice move here on the breakout. I think another pullback down closer to say 61 or so near that 20-day moving average would be very interesting. But I like the volume trends here, and I think this one will continue going up as well. But my pick this week, and I own this one, is AVAV. AeroVironment. I loved this gap up on heavy volume back in early December. Stock kept going higher. It was overbought. And I like to wait until these stocks pull back to key support levels. I think the top of this gap support, I think you could go back and see here, we went a little bit below the top of gap support here. But anytime you get a big move up on heavy volume and you see the stock continuing to rise after the open, that top of gap support a lot of times will provide really good support on these pullbacks. And so AVAV actually came back down very close to this level. And I think it's 52.52 was the open that day. And today's low got down to 52.74, very close. I think Friday's low may have been just even a tad below that. So I think that the stock has either hit or very close to a support level. And so I like to reward the risk. So I am going to go with AVAV. Current price is 53.42. And that will wrap up the Monday setups. And you'll see on your screen a summary of what Aaron picked and what I picked, our final picks, along with some of the other stocks that we considered in coming up with our final pick. And now let's move on to earnings spotlight. So normally on Mondays we have John Hopkins from Earnings Beats come in here, but he's actually going to come in tomorrow. So we've got him pushed back to Tuesday, so he will be in tomorrow, which should be pretty interesting because we've got earnings season getting ready to kick in. So it'll be interesting to see what he thinks with this run up. My guess is that he's going to be pretty bullish with these earnings reports as we approach some rather big ones to start earnings season later this week, as I mentioned earlier in the show, with JP Morgan and Wells Fargo out on Friday. But I wanted to go over some other stocks. And so I thought what we do during this segment is just pick a couple of quick stocks and take a look. I'll go over some of the numbers in their latest report. The first one that I want to take a look at is BlackBerry. And I know Aaron was very bullish on this stock the last week or two, and we've seen some huge moves to the upside in BlackBerry. I think the stock looks really good. In its latest quarter, they reported on December 20th. So you can see that was with this gap up right here. On December 20th, they reported revenues of $226 million. The market was expecting $216. And they reported earnings of 3 cents, and the market was actually looking for a loss of a penny. So
hey, Tom, we're not seeing your screen right now. If you could share your screen.
Oh, okay. Hold on. Sorry about that.
I should have been paying attention to that too.
Okay. All right. So hopefully everybody's got the screen up now for BlackBerry. And you can see, I know, Aaron, you were talking about this one probably back in mid-December when it was making this move up.
Yeah, I think I talked about it on a chart breakout segment.
Yeah, and it has done, and not only did it hold up, in terms of the breakout, but the pullback I thought was awesome, holding this rising 20-day moving average and then gapping up again. I think this is really a strong-looking chart. But I mentioned they beat top line, they beat bottom line estimates in their last quarter, which was reported right here on this gap up. And my guess, of course, they won't be reporting again until sometime in March. But this is a stock that looks like it's anticipating better fundamental news ahead based on the another gap up and the heavy volume coming in. Looks like a stock under accumulation. So I was going to get your thoughts. What do you think of BlackBerry? Are you still bullish here?
Yeah, I would have to say I am still bullish, and I'm going to just give you a quick look at my chart. So you can see I got that PMO buy signal. Hopefully you can see my chart. All righty.
Yes, we got it.
Perfect. Okay. I'll just assume you can just break in if you can.
Yep,
I love this PMO moving pretty much straight up. We're not seeing any hesitation right now. I would say it's not totally overbought at this point either. We've seen it get all the way up above 8 as far as the PMO value, and we're not even at 6 yet. So I think there certainly is more time for it to run up.
Awesome. All right, let's take a look at the next one. The next one I have on my list is FedEx, FDX. This is a company that just reported pretty strong results as well. They came out with their results on the 19th of December.
Yeah,
So
we
you
don't have
can take a
here.
look. You can take a look here. Beautiful move up. Here was the announcement. So we got the big gap up, tried to pull back a little bit, but really not much. And now FedEx has really just taken off again to the upside. Look at the volume coming in on this move. This is just a stock that really looks to me like it is, that there's a lot of accumulation taking place. And the fact that it went sideways for quite a while and is now making this breakout tells me that maybe it has a little bit more room to grow. What do you see on this one, Aaron?
I think it does have room to grow, but as you just said in your comment, a little more. This is just a long-term daily chart that we're looking at here. The PMO is starting to get stretched out. I mean, as far as the last year or so, it's already in the overbought range. It could still get all the way up here though to 6. So I mean, we're not completely overbought, but that's why I think there is more run on it as well.
Okay, awesome. The third stock that I have is SAIC. And I really liked, I think I had this one in my setups from last week. I didn't pick it as my pick, but it did, after gapping up on really heavy volume. This is another company came up with strong results. Their revenues had come in at 1.14 billion. The market was only expecting 1.10 billion, and their earnings were 97 cents, and the market was expecting 85 cents. So a huge surprise. Yes, that is not a great looking candle. I never like to see big volume and a black candle, because what it's telling you is that after posting an intraday high here of roughly $88, we did see the stock come all the way back down to $78 just 3 or 4 days later. And that was after that black candle printed. But normally, if you do see a reversal like this, a lot of times you're going to get support either at the 20-day or at the bottom of gap support. And you can see this one really is shaping up to me to look really more like a cup than anything. After a huge move to the upside, it looks like we're just now starting to rally back up again. And so I think this one's got a shot maybe for that 83, 84 level where it was before. What are you seeing on this one?
All right. Well, I went ahead and annotated it a little bit while you were talking about it. I do have a little bit of problem with it just because of where my PMO is located, and it is technically on a sell signal. But you can kind of see when you look in the thumbnail, it is trying to curve up just a little bit. And I don't see overhead resistance until about this area here at about, I don't know, what is that, $80.50, somewhere in there. So I think there is some more time for the run up, but I would be concerned about it not breaking out here at that level and probably pulling back.
Okay. And we have one more to go, and I am going to bring that one up. It is Intuitive Surgical, ISRG. So let me show you this one. This is another company that came out with stellar results. Now, the interesting part about this chart is that, number one, Intuitive Surgical reported its results back on October 19th. So this was the candle with earnings, and you can see the heavy volume. Now, we've had some heavy volume to the downside, but as far as I'm concerned, we have a really nice uptrend still in play. And off of this uptrend, at first I was thinking maybe we were going to get a cup, but I also see, and I drew a line here going across, looks to me like we got a really nice neckline that came in at about 390 off of the high that was above 400. So here's your left shoulder. Here's the left side of a neckline. Here we come down to pretty good support around 360, all the way back up to 390 to put in the right side of the neckline, and back through the 20-day moving average, by the way. And that's important because normally when a stock is downtrending, we don't get that move back up above the 20. We keep struggling with it and keep going lower. So I think this is starting to give some really bullish signs. Today, the stock is up about $7. I think a break above 390 with this measurement actually sends it up to 420. And this is a company that's going to be reporting again in about 2 weeks. So really interesting stock to watch. But I think this chart is setting up nicely, and we could get a nice pre-earnings run up if we get a breakout above 390. What do you see with this one, Aaron?
Yeah, absolutely. I want to point out the MACD because it's going to be a good learning experience here to show the PMO. You can see it is the MACD has just, it had a crossover a while back. But come look at the PMO on this, and you can see they do travel differently. They're different. So when you look at the ISRG chart, you can see with that PMO, we're just now getting that positive crossover. And really, we got a nice bottom here coming in in, somewhat oversold territory as well. So I love this chart, honestly. I'm just going to be honest. I'm actually thinking I might go and pick this one up, but I like that whole cup and handle like you were talking about. But this is such a great setup for the PMO. Nice, clean, positive crossover. OBV, while flat, you can see in the thumbnail when it has been confirming this rally that we got here, where it's consolidating now on that 20. I do like it. You've got the scooter, although it fell back here, it's now heading back up into that hot zone. So I think this is a real promising chart, to be perfectly honest.
I told you.
Full disclosure, I probably will go and pick this up.
I told you we're going to turn you into a trader.
I know. The question is, how long will I hold? I guess that's of course part of the short-term, intermediate-term thing. But yes, I know. I have to say, since doing the show, I've traded quite a bit more than I used to. So,
absolutely, yep. Hey, it pays. I mean, in this market, of course, I guess buy and hold everything pays if you're on the long side. Doesn't really matter what you're doing.
Exactly.
Doesn't seem to matter.
I mean, that was one of the reasons we ended up with Market Timer of the Year, because it was the slow and steady hand, as they say, is holding on to those buy signals even when it looked like the market was overbought. All along the way, a lot of people were switching in and out of signals, and the slow and steady hand, just staying on that buy, is what got us up to the top of the Market Timer list. So a lot of times, you don't have to be in and out. So yeah, here are our earnings spotlight, the charts we did look at. And with that, I think we're going to go into looking at the Chart Watchers blog. We did actually get a couple of questions coming through on that. And, in the chat box about, well, what do you think about so-and-so's blog? And what do you think about so-and-so's blog? Well, I'm going to tell you what my thoughts are. And of course, I'll just be honest. I mean, I think our bloggers, our commentators are outstanding, including you, Tom. And so really, whenever I get a Chart Watchers newsletter, I do want to go in and check out what everybody else is talking about, because it only comes out every 2 weeks. And so you'll get a little bit more of an intermediate term look for all of you out there who are always wanting to look at a more intermediate term look. So, and in this case, Tom, you did a long term. So I'm going to start with John Murphy, because of course he is the writer of, I would say, the Technical Analysis Bible. So if you haven't read Technical Analysis of the Financial Markets by John Murphy, go do it for sure. So and the question was, do you feel a little concerned based on, what John Murphy was talking about? And really the main thing he was discussing was overbought. Look at this RSI. It's really crazy right now on the S&P monthly chart. And so that is, of course, something we worry about, because when that happens, we usually see that bear market come in there, or, a nice correction, serious correction. So that's something that he's sort of watching out for now. But as we know, the perma bull market, I mean, this Teflon bull market, I think, as Arthur Hill calls it, we've really outdone ourselves. And you can see back here, after when we were in the .com, we got even more overbought than we currently are. So I think there is some issue there. And then he went into Elliott Wave, and admittedly, I know very little about Elliott Wave, just enough to get me through my CMT exams. So he does talk about Elliott Wave and the fact that, we really should be looking at a down leg, I think, coming up. So I think what he's telling us in this is, you should be cautionary right now. We're starting a new year. We just had an amazing bull market run that has really stretched that market out, but it's been stretched out for quite a while. So I think it's just a matter of showing some caution. The other one I wanted to go through, and I think follows in this, would be Carl, my father, in case anybody did not know that by now. He wrote for me this weekend. He had some really great information on looking at earnings estimates. And he has this chart that we have been keeping up for I don't know how many years. And it basically tells you the red line is overvalued, the green is undervalued, and of course, blue is kind of where you want to be. And we've seen this irrational exuberance, as he said, and we're seeing it now again. And you can tell that once we got to that level, we did have to pull back a bit. But what he does mention is that these ranges are likely with the tax plan passing and corporate tax rates moving lower, that will probably change these overvalue, undervalue numbers and bring them up closer to where price is. So we probably won't be looking quite as overbought as far as earnings go. But I think this was a really good article you want to check out. And finally, Greg, we don't want to leave Greg out. And he talked about really a couple of charts he went through on Friday. So honestly, I would recommend watching the show on Friday to get some ideas. And I know he's come up with some commodity countdown videos as well. And he talks a lot about energy, of course, and oil. That's his thing with commodities. But his concern at this point is, we need to see these ratios starting to show some strength here. And this one I thought was a particularly interesting chart. And he's basically looking at the oil and gas equipment and comparing it to oil as far as a relative ratio and comparing it to the S&P. And what you really want to see is a breakout here. We're starting to see it a little bit here on the exploration to oil relative strength. And we're just now starting to see it come through on compared to the S&P. And that's good. And he does note here that is sort of an ascending triangle sort of formation here. And that usually breaks to the upside. So he's looking for these relative strength numbers to improve. So that was pretty much my three that I wanted to go through.
All right, sounds good. I'm going to go through the other ones because I thought all the articles this weekend were really good. First, John Hopkins, who I mentioned will be with us tomorrow. He had written a pretty interesting article. I'm just going to highlight. He showed the PPO, but he had changed the parameters and went with a 129 setting instead of the 1226.9 setting. And essentially what he was doing was taking a look at where over the throughout this bull market, where prices have topped out on the PPO when you consider how far above the rising 20-week moving average we are. And so that's what this PPO was suggesting. And you can see that as we get up, I don't know, maybe that 7-10% area, that's where we've in the past, at least back at the beginning of the bull market, where we could expect at least a little bit of a pullback. And then he showed the most recent 2013 to 2017. And you can see where we are right now. We're just now starting to move into that area where back in the early part of the bull market, where we did at least try to settle down for a little bit. So, but his general thoughts were that price action, you don't argue with the price action. The fact that it's going up is telling him a number of things. And he went into those, just that more companies were beating estimates, raising guidance, that technical price conditions are strong on a larger number of companies. And Arthur, I'll go over his article in just a minute, I think pretty much says the same thing. And then also more sectors are participating. I know there for a while, energy companies, they were in the downtrend. They really weren't seeing a whole lot of great reports coming out. But now that's changed. And now we're getting even a strong energy sector to help. So I thought that was an interesting article that he had written. And then Arthur talked about pockets of strength outweigh pockets of weakness. And so, again, he's talking about how the majority of companies are healthy, technically. And that's the hallmark of a bull market. I mean, you can sit there and say, well, they shouldn't be, or, I don't want them to be, but they are. And so prices continue to move higher. Most companies remain, I think he was using the 200-day moving average as kind of a relative tool to see how many companies were above the 200-day moving average. And you can see that the numbers were pretty substantial. When you look, and of course, when prices are rising, you expect most companies to be above their 200-day moving average, but that's what this chart confirms. So I thought that was interesting. And then I had done a stock market forecast, and I'm actually going to join. I mean, if you want to, if you have any interest, I'm actually going to join John Hopkins later this afternoon, and we are going to do a 2018 stock market forecast webinar. So at the bottom of my ChartWatchers article, if you want to look at this and maybe get some more information and some of the things that I'm looking at as we go into 2018, you can just follow that link. I do think that John is offering a free trial for a period of time, so you could come to this webinar at no cost. But anyway, if you're interested, go back and look at it. The thing, the primary thing that I look for when I'm trying to forecast going forward, areas that can do extremely well, are areas that have been basing for a period of time. Now, we've seen a huge run up in prices in 2017, but not every area saw that huge run up. So I do think we could see rotation into areas that maybe hadn't participated as much. For instance, you can see that the broadcasting and entertainment group from mid 2015 to the lows that just printed a few months ago, we hadn't gone anywhere in about 2.25 years. So this is a group that certainly hasn't gone straight up, and yet there's a nice little bullish cup in play. So I think this is a group that could go higher, and one stock obviously that could benefit would be Disney, DIS. If we were to get a breakout, I think Disney's been consolidating for quite some time, and so that's a company that may be able to benefit from a big breakout. And we're seeing a lot more money rotating, by the way, toward consumer discretionary. So in my article, I focused really on areas within the consumer space. You can see the footwear index after a huge run up from 2012 through 2015. Literally over the last 2.5 years, we have been sideways consolidating in a very bullish continuation pattern, a cup. And so I think a breakout here would actually measure in this group up to 1600. So I think this one looks pretty good. And then one final one, talked about the Brewers. Now, this is not consumer discretionary. This is consumer staples. But check out the downtrend that we've been seeing here. I think if this group breaks out of the downtrend, this is one that could run in 2017. Now, they're not, this isn't internet stocks. Brewers don't typically move like internet stocks, but I do think after moving lower for about 15 months, if we get a breakout, this is a group that could perform really well in 2018. So those were some of the things I looked at. Now, with that, I think that is it for the ChartWatchers review. I do want to just quickly show you that if you go into the blogs page and you scroll down on the right-hand side, if you're not already getting the ChartWatchers newsletter, this is a free newsletter that, as Aaron mentioned, comes out twice a month, usually the first and third Saturdays of the month. And so you are going to, have this sent to you. All you have to do is type in your email address, sign up, and voila, you got the ChartWatchers coming your way. So that is like the first thing. If I was heading into stock charts for the first time, didn't do anything else with the website, that would be the first thing I would suggest you do, because there is a lot of great information that's shared twice a month, as we just went over. All right, so I think that is it in time now for the 10 and 10, correct? I'm not hearing you if you're there, Aaron.
I'm sorry, I muted myself. I didn't want everybody to hear me.
That's okay.
Okay.
What was that?
Yeah, so let's do this 10 and 10. Let's the first one, as we mentioned at the top of the show, is Tech Resources, TECK.
All right, Tech Resources. Well, beautiful breakout, just overbought. I mean, I think that really stands out, but I have a feeling you're going to see some really solid numbers coming out when the company reports, just based on the technicals and the fact that there seems to be quite a bit consolidation. What I would do is I don't like to buy these stocks when, it seems like it's never going to pull back. And, you can see here, it finally did. And when it did, it wasn't pretty for a while. But I think that the rising 20-day moving average is an area to keep an eye on any pullback. So that's what I would be looking for here. I like the stock. I love the price action that's taken place here, but I don't generally buy any stock with an RSI at 80. And I'm not saying that it's a sell either. I mean, it's probably more of a hold for most of you, especially if you hold longer term. Short term, yeah, you could get out at some point, maybe watch the 60-minute chart. And if you get a negative divergence there, maybe consider taking profits. and waiting on a pullback. But this is a great looking stock, and I expect that we will see it continue to rise with perhaps a little bit of a pullback from time to time.
All right. Number 2, GM, General Motors. Take a look at that one.
All right, GM. Yeah, I think actually the volume that came in at the beginning of this month, I think breaks a downtrend, and I think the GM is looking pretty interesting here. So, and the downtrend that I was referring to, I think if you take a look from this high and connect this high, I think you will see that this downtrend, and really, I'm going to actually change colors because anytime I get a continuation pattern, I like to do it in the black. But I think right here off of an uptrend, I see a very nice wedge that we just broke out of with heavy volume to the upside. So here's your prior uptrend. Here's the wedge. And now here's the breakout. Look at the MACD turning back up above the center line. Again, volume trends are strong. I think GM looks pretty interesting here. I would expect at minimum of a move up to 46. And ultimately, I see a breakout coming above 46.
Okay. See the next one, KRO.
All right, KRO. Kronos Worldwide. Big move down here on heavy volume. This one's just kind of flatlined though since then. Interesting because it did get back up through the 20-day, but it hasn't negotiated the top of gap resistance. So what I would first be looking for from a bullish perspective is to see it clear where it had closed prior to that big drop. So I think we need to get through roughly, let's call it 2740, 2750. And if we can get through that level, because here's the gap down from that prior close, here's that gap down, here's the heavy volume, and the volume's been, kind of dwindling as we go up. So I'm concerned here. Again, we're in a bull market, so I'm expecting more bull market type resolution. So I expect it to eventually make the breakout, but I'd like to see it. I don't think I could add here, knowing that I'm right at gap resistance. So still got a little bit to prove on this one, but the uptrend still does remain in play, the longer term uptrend.
Okay. Another popular one that we'll cover is UCTT. It was Ultra Clean.
Yeah, and I think this one is in the semi space. This one's got a lot of conflicting signals here. I mean, a huge gap down, heavy volume, failure at the 20 a couple of times. But then look at the volume coming back in to the upside. I tell you, for me, I'm going to play this bullishly. I think that this breakout to the upside is bullish. But if it truly is bullish, I think there are a couple things to watch. To the downside, that rising 20-day moving average now should hold. It was acting as resistance for a while. That should now act as support. And also that heavy volume gap up and continuing move to the upside was at about 2280 or so, maybe 2275. The top of that gap support nearly coincides right now with the 20-day moving average. So if we were to break down below it, especially if the volume picked up, I'd be careful. Otherwise, I would play this as though an uptrend is just starting here.
All righty. Next one I have, number 5, is for our Canadian friends, LB.TO.
All right, LB.TO. All right, Laurentian Bank of Canada. Wow, big. I don't know what happened here, but obviously there was something going on with some big volume. The good news is it held trendline support. Bad news is it lost some pretty key moving averages. So I think it is going to be stuck here between two levels that I would watch pretty closely. So the first thing I would do is connect the trend line here, which to me suggests that we've got pretty good support at that trend line. You can see that the hammer that printed here marked the bottom. And then even after all this selling, we did kind of hold on to this. And I can probably move it down just a little bit right about there. We did hold on to this trend line support. So this is something I'd watch to the downside. Now to the upside, I think that the key price resistance level sits at 57.50, which is this reaction high. So you have the huge selling, and then on decent volume, we actually recovered back up to about 57.50 before we moved back down and nearly tested the bottom again. So I think right now we're sitting between, I'm going to say 55.50 and 57.50. Let's see which way breaks. My gut tells me we're going to break back to the upside.
All right. And one I think will be interesting that was requested is the utility spider, XLU. And I know people are thinking it's at some support, but I think 50 is probably more likely support. So I don't know. I'm looking for more downside.
Yeah, I mean, this group is it's obviously out of favor. Anytime you got yields rising, these utilities don't look as attractive. Many dividend, income traders or those who are seeking income look to utilities because they tend to pay a really nice dividend. But the problem is when treasury yields begin to rise, those utility dividends don't look nearly as attractive. Obviously, they're not as safe as treasuries. So that's the problem. And we're in an environment where most traders are expecting increasing treasury yields. And as a result, I'm just not seeing a great opportunity. I think all this heavy volume and move to the downside suggests to me that we're probably going to see continuing selling. So I think for utilities, I kind of agree with you, Aaron. I think this 50 area is probably a level that we should be taking a look at. So you got a number of lows. You got this one low here in July at 50 and a half. And then you've got a number of lows that come across here at 50. So it looks to me like we're heading down there. We still don't have a positive divergence yet. We could bounce at any time just because we're oversold, but I would not put a whole lot of stock, no pun intended, in that move to the upside. I think the 50 and a half area is probably where we're going to maybe look to find some support.
All righty. Next one, a biggie, Walmart, WMT.
Yeah, Walmart, I think, looks very solid. I mean, we had the big gap up, sideways consolidation for a while, and now we're getting another breakout. I'd like to see a little bit more volume. We do technically have a negative divergence, higher prices, lower MACD. So a trip back to the 50-day is certainly possible. But again, with the market not really wanting to pull back much, and this being one of the better looking stocks out there, huge move, by the way, back in October and November. So it's tried to consolidate. Now it's breaking out again. The major support on this stock going forward, I think, is right at about this 94 and a quarter area.
Okay. Number 8 is SRPT.
All right. That's Sarepta. Is it SRPT? Is that what you said?
Yes, SRPT.
Therapeutics. Yep. Okay. I like today's candle. Didn't really like the selling that we saw on Friday, but if this holds, we could be getting a nice little reversal on trend line support. So that would be good news. The trend line that I'm looking at is more of a shorter term trend line, but just kind of connecting these right there. You kind of see that's been holding. We continue to trade with a MACD that's above the center line, so we know we've got strong momentum. So I like the reversal that we're seeing so far today. I think this one has a shot to reverse, head back up towards 60. And to the downside, I'd be really careful if the 52 level was lost. So if I put that in here, you can see the tops that came in right around 52. Here are all the bottoms at 52. So that's a level that I would want to hold on to the downside. But I'm looking for a reversal on SRPT and maybe a trip back up near 60.
Okay. The next one I have for you is SBA Communications. So SBAC.
Yeah, I got chased out of this one. I owned it, and it's part of the mobile telecommunications space. And I wrote about that a little bit this morning in my Trading Places blog, that we did get a nice little reversal. It looked like maybe that group was breaking down, but then we came back up on Friday and held support, which I think is good. And I think that's good news for this particular stock. I see maybe a little bit of a triangle here. And off of an uptrend, I would suspect that this is going to break to the upside. So what I'm looking at is maybe connecting these highs, something like that. And then all of these lows coming in here, maybe like that. So it seems to me like it's kind of squeezing, and we've got great price support. I'm going to say right there. And then again, the bottom of gap support. So I'm going to say that this is really a key zone to the downside. We held it the first time. I think if you get some volume coming in and you can get a move through about 164 or 165, I think this is heading back up to 172 and a half to test that prior high. So I like SBAC. I got head faked out on this increase in volume last week in the move back below the moving averages, but I still like the stock, and I wouldn't be surprised to see it test the highs, and maybe within January, February time period.
All right. Final one is Finish Line, FINL.
All right. Well, I've mentioned this one as a setup earlier in the show, and I will tell you I own this one. I'm looking for the 20-day moving average to hold. So I think we got a couple of key areas to watch, at least a couple of key ones that I'm watching. I think we had a nice gap up here on heavy volume with earnings. And then after that earnings, you can see that we came down intraday and tested right around 1250. So I think this 1250 to $13 level is pretty interesting support. And the rising 20-day moving average coming in at 1284 is also helping. Keep in mind, last week, middle of last week, the stock was trading at $15, and now it's at 1287. So nice little haircut. I like the overall group. I'll go ahead and save this one, but I do want to just show you the retail apparel group. And let me get this one up here first. But I think the retail apparel stocks in general, when you look at them, you can see this is the move down to test that 20-day moving average. So I think that's why we're seeing some of these stocks moving down here over the past week or two, but I think it's providing an opportunity.
Okay. And that completes the 10 and 10. And you should be seeing a summary of which symbols we did do today. So you can take notes, go back and take a look at them. But with that, it's time for our second and final market update. And we will go right to it. All right, I'm going to refresh this. It's always a good idea just to make sure you have the latest. And as we can see, the Dow and most of the markets opened lower. The Dow hasn't quite made it back up to positive territory, but we can see the S&P is now back into the positive territory. NASDAQ has been for quite some time, but it is consolidating right now, right around that 7150 level. Russell 2000 small caps had a really difficult morning. I think you can tell right here, but they've been rallying ever since they hit that intraday low at about 10:30. So we're watching them now move up to a point where they might actually finish on the positive side for the small caps. TSX, not so fortunate. It's still heading lower, although it does seem to be finding some support at that intraday low that was formed before 11 this morning. And we can see treasury yields. They're really kind of volatile this morning, up, down, then up. And now we're back to about mostly unchanged for treasury yields, reading 24.78. UUP gapped up, but is now consolidating sideways. Commodities are down slightly, as is USO, which has basically been consolidating just underneath yesterday's close, currently reading mostly unchanged, really at $12.30. GLD has been trending lower, but does look like we're trying to make a bit of a comeback here on gold. It's taken back about half the losses right now, heading toward the positive, currently reading at 125.13. With the VIX, gap up. We were actually looking at readings about 9.9 for the high of the day, which is, still, let's face it, below 10 is still pretty low. And now we're right around that 950 area. We can see that declines are leading advances, although advances are starting to pick up a little bit. And finally, I want to go and take a look at our top 10 movers and scooter movers. As you can see, as far as scooters on our large cap, we've got Eco Patrol actually is leading at this time as far as the large cap. And there's Michael Kors. It's been sitting at the top for quite some time, but when you look at that run up as far as a rally, looking pretty good. And then I would say looking at that consolidation zone and that little breakout occurring there is positive for Michael Kors. But which ones are making the big moves today as far as the scooter? As you can see, we've got Western Union. Look at that breakout. I'm going to take you to that chart, in fact, just so we can get a quick peek at it. We got that amazing breakout yesterday, and now, I'm sorry, on Friday. And now we're looking at another gap up here and making some big moves here on Western Union. And I'm going to finish with that. I don't know if you had any news on Western Union or if you knew anything about why that was making its move. But if you have anything interesting to add, Tom, I'd be happy to pass it to you.
Yeah, I don't have anything interesting, but I thought what I would do just quickly is go through. I wanted to show the scooter movers among the small cap stocks, and maybe I can show just real quick how you get there.
Yeah.
But let me go back to the home page first. And if you're at your your dashboard and you go down the Pro Control Center here on the left side and hit Scooter Reports, and then go to Small Caps. And then I hit the change just to see what's been, what's making the big changes. These are the downs, but if you click again, it'll give you the ups. And I was just talking about mobile telecommunications and the fact that, we're starting to see some strength resume there. And among the small caps, 2 of the top 5 are in that mobile telecom space. Now, these are small companies. These are probably the small of the small. But NIHD, you can see making a breakout. You can see that the stock had been downtrending for quite a while. Now, all of a sudden, hey, if a 50-cent stock is your game, this is an interesting looking chart with some nice breakout, and already today 5.7 million shares. So really heavy volume coming in on this stock. And then also, if you take a look at ATN International, huge move with this hollow candle. This is a Marubozu candle, which I've talked about. Anytime you get a candle like this where you open on the low and so far close on the high, obviously we're not closed yet, but a breakout above 60 here would be pretty strong. So those were 2 mobile telecommunication stocks. And then down here was a third one, Shenandoah Telecommunication, which also trying to reverse with a positive divergence here. We had lower close and looks like might be happening right at about price support as well, maybe just beneath. Well, right about price support. So here was your tops. Here was your breakout with heavy volume. And you can see this has been an area of great support. And now you've got a stock that actually, with the lower close, has a slightly positive MACD. So this looks like a positive divergence. It's just, sometimes you can go through and look at these different scooter reports and it helps kind of confirm some of the things that you're seeing on the charts of many of these indices. So I thought that was kind of interesting just to pull that up, but that was all I had.
All right. Well, I guess with that, let's do the decision point report. I'm going to cover off most of our decision point indicators and give you a feel for what the market looks like right now according to decision point, and give you an idea of where I think the market might be going this week. So good thing to end on here. Let me go ahead and share the screen, the proper one. First, I want to take a quick peek at our decision point scoreboards. And as you can see, you can get these on your Pro Control panel. It's just one of the selections over here. For example, you can add the ticker cloud, but on my homepage, of course, I like to have the decision point scoreboards. What I want to point out, and I'd been watching the Dow very closely last week, and I think I probably wrote at least 2 to 3 articles about the movement on the Dow because of what was going on our signal scoreboard. So since January 3rd, we had 3 of our 4 all green, and I'm going to show you the NASDAQ also January 3rd. These are the most recent signals that have come through. A lot of people ask, what are these dates? And these are when the signals change. So with the trend model, they're all on the daily chart. So as soon as they change, we go ahead and post them as far as what their values are. The difference is on the PMO in the midterm, since that's taken from a weekly chart, those signal dates go in on the last trading day of the week, should we get that PMO switch on a weekly chart. Same with the monthly chart for the long-term PMO. You're going to see end of day or end of month always as the date, because that's when that signal actually, as we call it, goes final. But as you notice, NASDAQ and S&P 100 all green as of January 3rd. Now the Dow, it took a little bit more time to get itself up there, 2 days, but it managed to move to the positive as well. I can tell you, since I've been recording and summarizing these decision point scoreboards, this is not the first time we've seen everything green. the last time we saw everything green, it only lasted like 2 days. So we'll have to see if it will last more than that. But I think that speaks to the fact that, you know, when you get to this point where even your PMOs in the mid and long term, once you see all of these, I think that can be a little bit of a warning sign, because mainly because of what I just said. The last time we had all of these scoreboards green, it really I think outlined the fact that we were looking at, you know, an overbought situation. So I think we're in that same position. I'm not calling for a correction. I'm not looking for anything, you know, overly serious here, but a pause, something, because seeing all these scoreboards green, we'll have to see how long it can last. But, you know, with a bull market that's been running straight up, you know, for over a year, you know, it's not surprising to see all of these scoreboards go green. But like I said, there's only been one time in that whole time that we've marked all of them green, and it happened right before a market pause. So can't remember the exact date, but I could go back and check that for you for the next show. Anyway, I wanted to go into the Decision Point blog just to give you a quick rundown of what Carl was saying. Every Friday at the end of the trading week and the end of the trading month, he will go over the daily charts, of course, but the weekly charts for the weekly wrap. If it happens to be the end of the month, he'll cover the monthly charts as well. So great place to go. A record of our own. He's talking about our 2017 Market Timer of the Year award, I guess you could call it, that we received for last year by Timer Digest. Very exciting. It's our very first time at the top. So anyway, he was pointing out this is the daily chart for the SPY, and you know, we're getting another breakout here. These are as of Friday, so some of these charts may appear a little bit older, and that's why. But I wanted to show you his annotations before I get into mine. So I think this is a real important chart here on the daily chart, and it's something that you know, when you look at John Murphy's article, when you look at what Carl has written, and what Tom and I have been talking about, you know, we're looking at such a run up here. And one thing that I don't think has been really talked about so much is it really has a parabolic form to it here. You know, when you start seeing ever increasing angles of ascent, you know, that's a problem. And the steeper they get, the harder they are to maintain. And he didn't draw a rising bottoms trend line here, but you can see right now, in the very short term, we're looking at a straight up move, and those are very hard to keep a hold of. He also wanted to point out that the PMO is looking quite overbought right now. I'm going to go over to my charts here. I wanted to show you the small caps because we were looking at that earlier. I've been kind of concerned about them for a while here. I know, Tom, we were looking at going into December. You know, we did get that move mid-month to get those small caps up and running, but we're really struggling now at overhead resistance. And look at the PMO is totally flattened out. Yeah, we just got a buy signal if you look here in the thumbnail. And I do like the fact that volume is not, you know, as far as the OBV hasn't really lost anything over that period of time that we got that consolidation. So we didn't see a lot of people leaving in a big way. I don't like that scooter though moving downward. So I think, you know, of the indexes, small caps are, you know, definitely in that struggling zone. We really need to see them break out over at that overhead resistance area. And, you know, when you look at the other indexes, let's see, I'm going to take you just back to my S&P chart. You know, you can see how it's been consolidating, right? The S&P 600. Let's look at the S&P 500 again. We had our little bit of consolidation in the large cap indexes and then had the breakout. So there's a really good chance, I think, right now that they're just, the small caps are just a little behind. They're still in consolidation phase. So I think there's an opportunity for them to beat that overhead resistance. But, you know, if we start losing or pausing in the larger cap indexes, of course, I think we'll put a little bit of pressure on the small caps and they may not break out. So, you know, you have to pay attention closely to to the large indexes, of course, but you want to see small caps participating if you want to maintain a nice, strong bull market. So that I think is a little bit of an area of concern. I want to look at our indicators very quickly to bring us into this week. These are the climactic indicators. So this is where I look at those candlesticks. And of course, candlestick formations are really, they give you a day. You know, that's it. You don't usually follow them up much more than that. So these are really short-term indicators. They're your breadth indicators. And then I also use, the number of new highs. And so what I look for are these big moves, these climactic readings here. And we did get climactic readings as far as our new highs are concerned. And we got, you know, they're somewhat high here for our breadth. But mainly what I look for too is a combination of these climactic moves on breadth, and then look at the inverted VIX. And I know everybody, there's a lot of questions. Why do you use an inverted one? Because I'm looking at it in a very, very short time frame. And so I look at the Bollinger Bands, and whenever you get very low readings where you might get a puncture or near the top, and you combine that with these climactic readings, that's usually a turning point. It gives you a turning point for the next day or two, maybe into the week. So right now I am seeing somewhat climactic readings, but we've already come off that top for the VIX. You know, we already hit that really low reading. We're now sort of sitting in the middle of the Bollinger Band. So I don't think we're getting much information off of this chart, even though we did see some climactic moves here. I feel like that top on the VIX kind of fell into this, that was the move that we needed to see and start looking for either a decline or an initiation. In this case, we ended up with things are moving up quite a bit here. So what I look for are these climactic readings, of course. I would be a little concerned now about follow-up here for the next couple days, because we did get such climactic positive readings to end the week. We are, like I said, mid-range on the VIX, so I don't think that's really that helpful. But I'm looking for a couple days of at least neutral action on the S&P. Of course, we're probably going to have a gigantic rally now that I've said that. But going by the charts, here's what I see. All right, our short-term indicators, the Swenlin trading oscillators, are these top two windows. I included the intermediate term ones, but I'm going to go through those on the intermediate term chart. I just like to get a feel for where our intermediate term indicators are. And we're coming up on the end here, so I'm going to get through these very quickly. So you can see we've been in this declining trend. We're finally starting to break out of that. So that is positive for the short term. But, you know, we've had some tops here. It's been really shaky. But you can see that the intermediate term indicators have started to turn up too. So, you know, it's kind of confusing here. I'll be honest, because the indicators are looking pretty good here, but the market it just feels kind of toppy to me. But I have to trust my indicators and look at these intermediate term indicators looking pretty good and not in, I would say, overbought extremes at this point. Just a quick peek at the big four, as I call them. Dollar, you know, we had the head and shoulders. I don't think it's, you know, not in play anymore. I think it's still in play because we really haven't, you know, busted out to start, you know, another top above that neckline. If we get a burst out of this top of this neckline, then you know what, the pattern just fell apart, just didn't happen. And you can see the PMO is trying to turn up, but I'm still not feeling good about UUP. It's really struggling right now, but it is sitting at support. So we'll have to see if it can continue. It's currently on a PMO buy signal on the weekly chart, but you can see it is sort of topping off here. So I'm still, as far as the dollar, I have to say I'm still bearish on it based on that head and shoulders. Looking at gold very quickly, we can see that nice breakout above 1300. I still look at that beautiful PMO. I still think we have more upside. I'm still looking for a test here of the high we got back in September for gold. And part of the reason is I think the weekly chart looks really good at this point. And I think Carl even annotated a weekly chart that was even, that I think really points out that we certainly have an opportunity here to start testing these previous tops. And again, very quickly, I know we're getting down to the end here. USO, I think, still looks pretty good at this point. The PMO is starting to decelerate somewhat, but you can see the scooter still looks pretty good. And as far as WTIC is concerned, we still have that breakout. We might see a little bit of a pullback towards that $60, a barrel, $59 a barrel move, just to pull back a little bit more before moving up. But I think oil still looks pretty good here. And finally, with bonds, peek here. I think Carl pointed out this double top, and I think that's still very much in play. I was looking at this broadening formation, and those are negative too. Typically, they don't finish off on the positive side. And look at that PMO topping below the signal line. So I have to say I'm definitely bearish on bonds currently. And with that, I know we need to wrap this whole thing up. And yes, I covered off, as you can see, I managed to get barely through the big four. Highly recommend you go check out the Decision Point weekly wrap. That is where you're going to get really detailed information about these. And anytime I write a DP alert, I go over these same ones. And in fact, I will be writing one later this afternoon.
Okay, great presentation as always. Yeah, I would just say, looking at the market right now, and I've gone through and I've looked at a lot of these different sectors, and both on the daily chart, the weekly chart, and what I'm seeing is, with the exception of maybe the financials looking like they could be topping on the daily chart, just from a negative divergence perspective, price momentum seems to be slowing in that area.
Mm-hmm.
I'm not seeing that in technology. I'm not seeing that in the consumer discretionary area, and I'm not seeing it in the industrials. And so those are the four key industry groups that we want to keep an eye on, just because, when you look back at history, when those four aggressive areas of the market are performing well and continue to suggest that we've got great momentum in play, rarely do we see significant pullbacks in the overall indices. So I don't think we're there yet. I mean, for me, I don't know if we're going to continue to fly like we have to start 2018. But I do know that this period that tends to be very bullish from October 28th to January 19th is once again performing extremely well. And as I demonstrated in one of our shows last week, the tendency for the stock market after a big move during this time of the year is for the market to continue going higher. It's not to pull back. I mean, common sense would be we just run too much and therefore we should pull back. But I think the more important thing to take away from it is that we're rising for a reason. And the market is looking ahead, seeing, full speed ahead. And so I think we're going to continue moving to the upside. We'll get profit taking from time to time, but I would be careful about reading too much into short-term weakness. So as we get, we're just a couple minutes from the end of the show, and we're, halfway through the first day of the trading week. Anything you're looking at in particular as we wrap up, the market later
Yeah,
today?
well, as I said, I'm still... the indicators are positive at this point, so I have to stay in the bullish frame of mind. But to me, it just feels toppy. So if I'm going to go by my charts, I have to say that I would expect things to rise slightly. But as far as like the way I am looking at, having looked at all the other charts, I'm thinking more neutral and continuing to sort of give us this topping action.
Mm-hmm. Well, I mean, it's okay to have different approaches or opinions or whatever. I think that, when you're looking at a market like this, it's much more, at least from a financial perspective. Listen, if anybody's nervous out there, they should be doing what feels comfortable for them and what has worked for them. But I just know, looking at what I'm seeing, I'd be really surprised if we saw any kind of deep selling. And when I say deep selling, I'm talking about anything more than 2 or 3%. I just don't see that in the cards right now with the way everything's shaping up as we head into the second week of January. I think we're going to continue to see more strength ahead.
Yeah.
But with that, I want to thank everybody. Really appreciate you stopping by. Uh, Please remember as you exit, if you don't mind, completing the survey. We do love to get your feedback, hear what hear what you think of Market Watchers Live. And as we've said many times before, we'd love to get your thoughts on things that we can do to improve the show as we go forward. But please take a moment and just fill that out for us and let us know what you think of the show. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. Hopefully it warms up for everybody on the East Coast and not too much rain on the West Coast. And we'll see you all tomorrow afternoon. Happy trading.